Yoder. My passion is to empower ag producers around their books and their finances. Beyond making these YouTube videos, I've also created an all-inclusive online bookkeeping course for producers called Ag Books. This online course will teach you all that you need to know to manage your books in QuickBooks Online. And one of the best features of this course is an exclusive Facebook group where you get direct access to me to ask any questions that might arise in your operations books. So I'll leave a link for that in the bio and you can check that out. Now let's get into today's video.
Hi all, I just wanted to hop in here and talk about how to categorize income that you've received from a loan. So really quickly here, just to clarify what I'm talking about. I'm talking about a line of credit, those advances that you get from a line of credit. I'm talking about when you receive cash from your lender in order to purchase an asset. I'm talking about any sort of loan proceeds that come into your bank account and how to categorize those and receive those. So a lot of people struggle with this, and it doesn't mean that you're ignorant or it's just a lack of understanding, and that's why I'm here to clarify this. It is a relatively basic form of bookkeeping, which I cover all of those basics in my course, Ag Books. There's a link in the description of this video. You can check that out if you think that's interesting to you. Otherwise, I'm just going to show you what you do with that income. You see this line coming across your bank feed. You've received money from a loan, from any sort of liability, which is something that you're going to owe back. And you don't categorize that as income. That doesn't go in crop income. That doesn't go in other income. It doesn't go in loan proceeds income. This goes directly towards your liability. So in this case, it would be line of credit. We just got $12,000 transferred to our bank account to increase our line of credit. So let me show you what's going on here. I'm going to hop over to that line of credit and show you how that works. You can see that we already have a balance on that. This really should be reconciled. Just a little tip for those of you watching, really reconcile those. But what's happening is so far, we've gotten nothing but advances from our line of credit. We haven't paid anything down on it, and I'll show you how to do that in a second. But you can see that it shows our balance. We owe $38,000 on that line of credit. When we get that other $12,000, that $38,000 is going to jump to $50,000. Okay, and I'm going to show you how that works. And that is the correct way to categorize loan proceeds. So we're going to go ahead, and I would always be really detailed in your memos. If you know what this was exactly for or whatever, if you know that you got it from Greenstone, I just like to be pretty detailed, but that's the bookkeeper in me. So just learn to be detailed. So we're adding that to our line of credit. Now, what happens? Let's check that out quickly before I move on. You can see our balance has gone up. Like I said, we're at $50,000. That comes and it says this $12,000 here says, hey, we borrowed more money. And that's going to show up on your balance sheet. This is not income or expense. These transactions are balance sheet transactions that are going to affect your assets and your liabilities. Okay, and for more on that, you can always go check out my Ag Books course. If you're not sure about wanting to do the full course, you can check out the mini course and get a taste of what that full course is gonna entail. Now back to the banking. So I know that this matches a bill from Farmware. We're going to ignore that and say that it is a principal payment or a payment in general towards our line of credit. Okay, so this was a payment on our line of credit, a pretty little payment, but it was a payment. Okay, and we're going to go ahead and say, what does it go to? Does it go to loan payment expense? No. Does it go to other expense? No. It goes directly to that line of credit. You are decreasing your line of credit. You are decreasing your liability. And so that money spent out of your bank account to the line of credit, that's how it gets categorized. Now let's take a look. Most of the time, we fail. I see a lot of clients failing to separate the interest less the principal payment. The principal is the only part that's going to decrease your liability. The interest is a deductible expense. Okay, so any of the in and outs of the line of credit, the money coming in that you receive into your bank account, the money going out that you paid towards it, those are all balance sheet transactions. That's going on between your assets and your liabilities. That does not affect your profit and loss. That is not going to show up as an expense or income. The only part of this that would be an expense is, again, your interest. Okay, so it's super important to check out that statement of cash flows and understand how that works. I go in more in depth in that in my full course. I touch on it in my mini course. You can check that out. Link in the description. This is how we split up our interest and principal. Okay, so we're going to say that $1,000 of this went to the actual loan. The rest of it went to our expense here. Voila. This is our payment. You have to break these out in order to reconcile your line of credit, which you should be doing. You should be reconciling your liability accounts. Okay, so now let's go look at how that looks inside of your line of credit. Look, the balance has gone down because we made that payment, and it's gone down by that $1,000. Okay, that 300 some dollars of interest is not going to show up here. That's going to show up on your profit and loss. So I hope that makes a lot of sense. When you're dealing with liabilities and when you're dealing with loan advances or loan payments, you need to be sure to make sure you're categorizing those to the liability, to the asset account that is in question. When you're purchasing an asset, we will go into that maybe in another video. But for now, loan proceeds go towards that liability. You can split up that principal and interest to make it accurate. So I hope that was super helpful. I'm so glad that you joined me, and I'll see you in the next video.